Starting. All right, here we go. Welcome everybody. Replace Your Dollar Bootcamp, night 2, day 2. I'm very excited that all of you have returned here for day number 2. Just so you know, these sessions are being recorded. So if you want to go back and watch it, if you want to share with your family and friends, please do so. They're being published on my Facebook page, on all the Replace Your University, Replace Your Mortgage Facebook feed. So they're available to everyone to check out. However, remember, on Friday, if you want an opportunity to win the funded accounts, you do have to be here and present, because you have to participate in the trivia contest that's going to be based on all the content that I'm covering. And we're going to be in the thick of it tonight. We're going to get into candlestick charts. You're going to learn how to read a candlestick chart tonight. We're going to learn about the basics of a bullish trade, a bear trade. And you're going to walk away here tonight with some practical, actionable things that you can do to trade. So I'm very excited to share all of that with you. Before I do, I'd asked all of you to post in the chat something positive that you did today. Oftentimes, you know, we focus on the negative, or we don't slow down the focus on all the good things in our lives. So just want to take a moment to read through some of that. So we got Billy saying he just listened to the beginning, real life training, and it's awesome. Jeremy Newsom's a beast. That was my coach. He still is my coach and mentor. Great people. We have a partnership with them, Replace Your Dollar, real life trading. So check all that out. Had a great dinner with my husband. Fantastic. I support my mango tree. Okay. Got a good workout in. Jim got a good workout in. Replacing my job with Replace Your Dollar. There you go. Where are you uploading the recording to? So that's to the Replace Your Dollar YouTube channel, but it's also on my Facebook page. So just, you can go ahead and search me out, send a friend request, and you'll have access to that. Wife and I had a great walk in the park, around the lake and through the woods. Rick, thanks for sharing that. So let's see, execs at work wanted something ASAP, and I thought, I can't wait to be a day trader. I get it. I couldn't remember what day it was when I hopped on here. So, you know, that definitely can happen when you're not working in that regimented W-2 world. We got Devin saying hello from Maryland. Had a decent 12-hour shift that I can't wait to replace with trading. It is possible too if you put in the time. And let's look at one more. Enjoy time with my daughter at karate class. Awesome. So listen, I encourage all of you, take some time to reflect on what's positive. That is important. There's not enough emphasis on what's good in the world. There's a lot out there. And so I'm glad you shared all that with me. A positive for me today, just, you know, trading, number one, being able to spend some time with my wife and kids. So my son, my oldest son, Roland, has been on this kick. He wants to exercise and work out and run and lift weights, and he's only 8. And you can only do so much with, you know, an 8-year-old. And I don't want to do anything that's going to hurt him. So I've been researching things to do, but so we put together like a little strength training program, and he got home from school, and the first thing he said was, "Daddy, can we exercise now? Can we work out?" So he was down here in the gym, getting after it today. So that was my win. And then I got to put my youngest son to bed, which was really cool. So the little things, right? So anyway, today, let me pull up the PowerPoint. So give me 1 second to do this. And how am I going to do this here? There we go. Share. So I talk to myself, if you haven't noticed. I talk to myself quite a lot. All right. So yesterday, we spent a lot of time talking about the mindset when it comes to trading. And the one thing that I encourage all of you to do is really just to let your mind think about what is possible through trading. I talked to you about what's needed in order to be a successful trader, and, you know, the behaviors, the habits of mind, believing, being committed, being disciplined, goal-oriented. I talked to you about how trading is a lot like riding a bike, and really encouraging you to imagine what's possible. And the myths that you'll hear about trading, I'm sure if you go and talk to somebody about this webinar that you're doing and say, yeah, I'm learning how to day trade, or I'm learning how to trade the markets, you're going to get some goofy looks. But That's fine. Take all those looks you want. You can count your profits. I told you a little bit about my story. Man, this picture here. So you can see my first year as principal. I look young and vibrant. And then this is like 6 years later. I'd applied for a superintendent's job, which the demand and hours that are part of those positions, school administration, are just insane. Blessing in disguise, I did not get that job. And now I get to, I do what I truly love. So I talked to you about my story, told you about Snapchat, my first big win, $283. I was losing my mind, going crazy, super excited. And then just most recently, driving back in an RV, making $6,000 on my phone trading. So all true stories. Tonight, here's what we're getting into. And let me share this screen and let's jump in. We reviewed day one. It was all about mindset, why trade, what's possible to you. Tonight, we're going to go over these 4 items. And remember, in order to win the funded accounts, pay attention, take notes, study. If you want to be a successful, profitable trader, you're going to have to get used to doing that. You have to study. You have to put the time in. You have to put the effort and work in. When you do, that's what's going to make you successful. So starting now, if you didn't take notes yesterday, start taking the notes now, because this information could be questions for that quiz on Friday, where you can win a $100,000 trading account. And we also have a $50,000 trading account that could be yours. So we're going to talk about what a stock is. What in the world is a stock, right? When's the last time you had a conversation about that? You're going to know what candlestick charts are versus line charts. I'm going to go into the differences between day trading, swing trading, and investing. And then we're also going to get into what does it mean to go long on a stock versus shorting a stock. And something I talked about yesterday was a lot of people believe that you can only make money when the markets go up. That's absolutely false, right? When the markets are going down, we do what is known as shorting the stock. And I'll get into what that means here tonight with all of you. As I'm going through, if you have questions, please throw those in the chat. I am going to stop at a few points tonight to just throw my link in the chat for all of you if you want to set up a discovery call, if you want to talk more about trading, learn about what we offer through Replace Your Dollar. This is my link. Several of you signed up last night, but go ahead and sign up. We can talk about how trading can change your life. And real fast, Devin posted in here, I tried to get a coworker to join us. She was interested, but she declined the free class and said to let her know when I make $150,000. I told her at that point, I'll charge her for the training. That's absolutely right. That's absolutely right. It's possible. I mean, honestly, $150,000 is possible through the markets. But that's that mindset. That is a mindset that exists out there. But remember, we're pushing away from that. We're learning something new. We're learning about what is possible in the markets. All right. So let's jump in here. We're going to jump in, start taking your notes. Put questions in the chat. I'm going to stop at times to ask you guys some questions. The more interactive and engaged you are with this process, the more you're going to get out of it. All right. So when we talk about stock, what in the world is a stock? You might hear a stock referred to as shares. I have shares of Apple. I have shares of Tesla. I've got shares of Shopify. I own equities. It's the same thing. It's stock. Okay. If you buy stock, essentially what you're doing is you're buying a small percentage of a company, right? You become a business owner. If you trade or if you invest and you own these little pieces of a company, you're a business owner. My son, my 8-year-old son, who I'm teaching how to trade right now, yes, true story. He doesn't have to be a full-time trader like dad, but he sure as heck is going to know how to do this. He's a business owner. How cool is that? He's an 8-year-old to say, yeah, I'm a business owner. All right. He has some shares in Coca-Cola, right? Why is this important to own stock? Because if you own shares, stock, equities, securities, whatever you want to call them, these things can make you money while you sleep. while you're doing absolutely nothing, because you can buy them and they grow and appreciate over time. Yesterday, I showed you the chart. Let me go back to the S&P 500. Okay, let me bring this up. And I talked to you guys about how the stock market is designed to do one thing, and that's to go up. And you could see, if we just keep going back in time, what the market does. And this is what it does. It goes up. So the chances are, if you buy low at some point and you hold for a long period of time, you're going to make money. I don't know too many other things other than real estate, which is equally as good. Now, my good friend, dear friend, Edmund Fontana, he's the real estate guru. That's who I go to for real estate. But you could buy real estate and it appreciates over time and makes you money. With stocks, you don't have the hassle of having a crew, managing a property. You buy the shares and they can appreciate, right? So that's what we mean when we talk about stock. All right, so let me get the share back up here. Give me 1 second. It's a little tough to navigate back and forth here, so bear with me. All right, so that's why it's important to own stock, because you can make money doing nothing. You buy it, you can hold it, and it can gain money for you over time. Now, what I want to talk to you about is the whole concept of trading. When we talk about trading, the difference between trading and investing, typically with long-term investing, you're buying and you're holding for a period of time. At least that's the traditional way of investing. When we talk about trading, we're talking about getting into a position with a stock and capitalizing on a price movement upwards and selling at a higher price and capturing that profit per share. And when we talk about day trading, what we are talking about is getting in and out of a trade within that day. Now, the stock market is open, so these are the regular hours from 9:30 a.m. Eastern to 4 p.m. Eastern time, okay? There is what is known as pre-market trading, which starts at 4 a.m. Eastern time and runs all the way up to 9:29. So you can still trade. There's just not a lot of volume. And then there's also post-market trading, which starts at 4 o'clock p.m. and runs to 8 o'clock p.m. Eastern time. But for us, for what I do, I don't trade pre-market. I don't trade post-market. I trade 9:30 a.m. to 4 p.m. And the majority of my trades are day trades where I'm in and I'm out in 5, 10, 15 minutes, sometimes an hour, 2 hours, 3 hours. Sometimes they go a day, but that is known as a day trade. So anything within a day is a day trade. Make sure you write that down. That could be a question. Now, we went over the terms of bullish and bearish yesterday. Bullish means it goes up. Bearish means it goes down. When we talk about a bullish trade, what we are trying to do is take advantage of the market as it goes up. So we are buying low and we are selling high. That difference in price, we're getting that profit times the number of shares that we have. On the flip side, a bearish trade, we are selling high because we know the market's going to go down. And as it falls and it gets to a lower price, we buy the shares back. That difference in the share prices, we get that times the number of shares that we're working with, right? So again, it's not just an up market, a bull market where you can make money. You can make money in a bearish market when the market is going down, all right? And you can see down here, I have a chart on the screen. This is a Netflix chart. You can see that it is, tell me this, if you look at this chart, throw in the chat here, a little question. Does this chart indicate to you a bullish trend or a bearish trend? Bullish, 100%. That's it. Yes, because the price action is moving up. Fantastic. Good job. All right. Now, candlestick charts. This is a candlestick chart that you were looking at. If you can read a chart, you can trade anything. Okay. Because candlestick charts can be used for stocks. They could be used for futures. They could be used for Forex, which is currencies, crypto. You can use it to trade crypto. If you can read a chart, you can trade anything. And also, if you can read a chart, you can invest long-term. See, one of the biggest things that happened for me, it wasn't just the freedom from trading and making daily profits from trading that really revolutionized my life. And I kind of hinted to this last night. Actually, I spoke to it directly, but I learned how to invest my money long-term. And something that can come out of this, if you stick to it long enough, is you're going to realize that, wow, I can manage my money and generate returns that no one else would be able to do. And it all starts with these candlestick charts. And a lot of people will take a look at, let me go back here. We'll take a look at these charts and say, what in the world is this? It almost looks like a different language. I know the first time I looked at it, I said, there's no way in the world I'm going to be able to understand. But it's not that difficult. And what I'm going to show to you is how to read and interpret the candlesticks. Okay, so that's this next slide here. So, well, all right, did it freeze on me? There we go. So here's two candles. All right, we have a black candle, which is a bearish candle, the price going down. And in this case, we have a white candle, clear candle, whatever you want to call it, which is a bull candle where the price is going up. Typically in your charting software, TradingView, I think we talked about that last night, industry standard for charting for stocks. Your bear candles are going to be red. So this candle typically is going to be red. Your bull candles are going to be green. All right. Now, something that you could do, and this is further down the road, but a lot of times, if you think of what's associated with red, go back to, so as a former teacher here, if you go back to your school days and a teacher would mark your paper up with red ink, how did that make you feel? Bad, right? Red is bad. So there's an emotional association there. There's a psychological association. When you see red, like, oh my, like I'm losing. And it's the same thing with green. You see green, you think money, you know, the green traffic light means go, right? What we want to do as traders, and this is something that I'm going to suggest to you right out of the gate, is when you sign up for your TradingView account, change the colors of your candles. Change your bear candles from red to black, and change your bull candles from green to white. Black and white, it's emotionless. It's black and white, right? And that's one way to help you process the information objectively. So I got off on a little bit of a tangent there, but that's important to share. And I got that from my mentor. It's something that I follow. And now I've changed up my candles to where, I think I said this yesterday, my candlesticks are Steelers colors. So the bull candles are yellow, gold. The bear candles are black, and gold. So you can put any spin on it you want. I guess there is some emotion there tied to me, but black and gold, I love both of them. So anyway, when we're reading candlestick charts, we're going to start here with this bear candle. So this is a bear candle, which means the price is going down. There are 4 parts to every candle. We're going to start down here at the bottom. So you'll often see, and not all the time, because not every candle has what is known as a lower wick. So this tail shadow wick down here at the bottom, it's often called that. This is the lowest price of this particular candle. All right. And candlesticks can represent any time frame, 3 minutes, 5 minutes, 15 minutes, 1 hour, a day, a month. You can choose the increment. But whatever increment it is, the lower wick always indicates to you the lowest price for that particular candle. Okay. On a bear candle, what we next have is the candle body. That's this rectangular shape right here. Okay. This is the candle body. The bottom part of a bear candle is where the price of the stock closes in that time interval. So for the purposes of explaining this, let's just say this is a daily chart. All right. This bottom of this candle body is the price where the stock closed for the day. Okay. So because it closed lower than where it opened, that's what makes it a bear candle. Now, if this is where it closed, the top part of that candle body on a bear candle is where the price opened. All right. So this is the price where it opened. And as you can see, because this is a bear candle, the price fell, indicating to us that the bears were in control that day. All right. Now, just like we have a lower wick, we also have an upper wick, right? And they sometimes call it a wick, a shadow. It's not called a tail because it's on top. And just like this is the lowest price of the day, because this is a daily chart, this is the highest price of the day. Okay. So there's 4 parts, 1, 2, 3, 4 of every candle. You have your low, in this case of a bearish candle, the closing price, the open price, and the high of the day. That's our bear candle. For a bull candle, which is over here, it's just the flip. It's just the inverse, right? The lower wick shadow tail is still the low of the day. The upper shadow or wick is still the highest price of the day. So that doesn't change. What changes is the candle body itself. And because this is a bull candle, and bull candles, we know, go up, the bottom of that candle body is where the price opens on that stock. So it's going to open lower, but because the bulls are strong and they're pushing that price up, it closes at a higher price. And that's what the top of that candle body on a bull candle represents. So bull candles indicate buying strength. The bulls are in charge. And so every day when you look at candlestick charts, what you're seeing are different shapes of the candlestick bodies, of the wicks and the tails, and it creates a whole new language that you can learn. And when you can read it and interpret it, you can trade the markets. Okay. What questions do you have about reading candlesticks? Or was that clear? Type a 1 in the chat if you're good with that, or if you have a question, ask it now. All right, seems like everybody's good. Not sure how the bear is profitable. We will get to that. Open and close price is based on regular market hours, correct. Does upper wick mean selling pressure? Yes. Yep. And we'll get into that. Do we define in the software whether the candle is 1 hour, 1 day? Yes. So you can choose the time increment for the candles. They have 1 second candles, 1 minute candles, 2 minute candles, 3 minute candles. You can create any time interval you want for your candlesticks. And it's all available to you on TradingView. I'll show you how to do that. Okay. So that is how we read candlesticks. So we're going to move here to the next slide. So that's candlesticks. What we see in front of us here, this is a line chart. And your entire life, and I'm very confident in this, this is how you've seen stocks presented to you. Unless you've gotten into trading and you've made an effort to do so, you probably have never encountered a candlestick chart. So before this boot camp, I'm guessing you had some experience with trading or you started learning about it. So you probably knew what a candlestick chart was. But the way that stocks are portrayed in popular media are with these things known as line charts. Now, a line chart does not give you all the information that you're going to get in a candlestick chart, because the line chart tells you one thing. Whatever your time increment is, it tells you what the closing price was for that particular time frame. That's all it is. So when you see this line and you hover over these prices, it tells you where the price closed, and that is it. It doesn't tell you the high of the day. It doesn't tell you the low of the day. It doesn't give you much information. Now, it does give you the trend, because visually you could see here on Tesla from September 2022 to the start of 2023, it was in a bearish trend, but it's not going to give you much more than that. All right. So this is how we get stocks presented to us in the popular media. So I pose this question to you, and I'd like to see your answers in the chat. Which chart do you think we would want to use for trading? Which would be better? Is it a candlestick chart or a line chart? And let me know why. What are your thoughts? All right, see, candlestick. Candlestick gives more information, more details. Yep, more information. Yes, you guys are absolutely right. So you can trade with a line chart, but you're probably not going to be very profitable. It can be beneficial when looking for certain types of chart patterns, like double tops, double bottoms, inverted head and shoulders, those types of things. But it doesn't compare to candlestick charts. So now that you know how to read these charts, let's take a look at some of them and get even deeper in reading and interpreting candlesticks. All right, so you're probably looking at this like, what in the world is this? Okay, so this is a candlestick chart on Netflix. All right, Netflix was very good to me from the end of November last year till about January of this year, because it just kept, every trade it seemed like I got in on Netflix just hit home and I nailed it. So hence why I have it included here on this chart. So we can see a variety of candlesticks here, and I'm going to show you an entry on a trade, how you would trade Netflix bullish. All right. So this candle right here, this is a bear candle that closes above this black line, which is known as the 10 EMA, right? And based on a strategy that we teach through Replace Your Dollar, you would get in right above that candle. And what you do is you can set in advance, based on your reading of the charts, where you want to enter your trade. So looking at this, as I was watching this chart unfold, I made an entry above that candle at the price of $358.67. All right, that's the first step. The next step is you have to protect yourself and you have to protect your capital. And so when you trade, you're always going to have what is known as a stop loss. Your stop loss is an area, a price area that if the trade would pull back and work against you, in this case, if it would go bearish, this stop loss that you put into your brokerage system will tell the broker that, hey, if this thing drops and hits this price, please exit me from the trade. So here's the cool thing. If your R is $100, right? You can set this trade up, your entry, you could put your stop loss in, and your broker, your profit taker, you could walk away. You don't even have to watch it. If it hits your stop loss, you know that you're protected, that you're only going to lose $100. Okay? The same thing goes for a profit taker. So this is the area where you believe, based on your chart analysis, that the stock is going to move to. You would set your profit target, and it's the same thing. You put that into the broker, you set it, you walk away, you come back 30 minutes, you check in on it, pick up your iPhone, and doing nothing, literally taking about 2 minutes to set up your trade, you could make a significant profit. And let's say that in this case, we had 1,000 shares, right? And was it $1.85? You could do the math there of what's possible without you even managing it. The work is on the front end, learning how to do this, but you automate it in your brokerage system so that if it runs in your favor and hits your target, it cashes you out for your profit. If it pulls back and hits your stop loss, you know you can only lose what it is you set out to lose. Okay. So this doesn't go into all the details of trading and the strategy, but I'm trying to give you an example of how you would read these candles and set up a trade entry to go bullish. And that's what's happening here on this Netflix trade. Okay. So let's go to the next slide. And this is an example of a short. Now, this was a concept that took me a long time to really grasp. It was difficult for me to understand because I just couldn't wrap my head around how in the world you sell something higher at a high price and you buy it back at a lower price and make money. It didn't make sense to me. Essentially, what you're doing here, you're borrowing shares from your broker to sell at a high price because you believe it is going to go down. So those moments where it's a bear market and things are dropping, this is where traders make money. We short the stock. Now, some of you are probably thinking, well, if you're going to borrow something from a broker, you've got to pay interest on that. It's like a credit, and you do pay interest. But here's what I can tell you: it's pennies on the dollar. Because think about it, you're in and you're out of the trade. It's negligible. It hasn't even registered on my balance sheet at the end of the month when I'm looking at my profits and losses. The interest that I pay is maybe a couple $100s a year, right? And I'm moving pretty significant position sizes. So a lot of people were scared off by that I can't borrow shares from a broker. I'm going to pay a ton of money in interest. That's garbage. All right. Here's how a short works. Similar concept that we talked about earlier. So if the market's going down, you could take advantage of it. You could profit. This is Netflix again. So this was right before that bullish trade that I showed you on the previous slide. But in this case, based on training and a strategy that we teach, this candle right here indicates to us there's a good chance this stock is going to drop. All right. So what we do is we set up an entry in our broker that we want to get in below this candle if the price goes below to trigger us into the trade. And so when you set that up in your broker, as soon as a candle would dip down and hit that price area, you're triggered into the trade. Before you enter a trade, you must set up your stop loss. Okay. Again, your stop loss protects you to ensure that you don't lose any more money on a trade than you are willing to lose. And quite honestly, when you're starting out trading real money, first of all, you should be practice trading, paper trading for a couple months before you start with real money. Not like me, I started with real money right away, right? I learned all the hard lessons, so you don't have to. You want to have a stop loss in place because if the trade turns against you, so let's say, see all this bullish movement here. If you got into this short in this area, you're feeling good as it's going down. But when this thing reverses and you don't have a stop loss in, guess what? That's when people blow up their accounts and lose a ton of money. All right. And that's not trading, ladies and gentlemen, that's gambling. And that's not how to go about this. It's not trading. Trading, you have a plan, you have a stop. You have a plan for every trade. So in this case, we have our stop loss. We also have a profit target based on our analysis of the charts. And so when this candle comes in, we get entered into the trade and boom, this thing drops. We hit target, we make money. And that's how it works on a short. So you're not just making money when the market goes up, you're taking advantage when the market goes down and you're making money from that as well. So that trade I just showed you on the previous slide, here was the bullish trade. So you could have done this short, made money here, and then turned around a few minutes later, traded this bullish and made money here. This is real stuff. It's real stuff. All right. Let me go to this next slide and close this. So real fast, we looked at a bullish trade, trading a stock upward, and we looked at a short, a bearish trade, trading a stock down. Questions about that? I got to slow myself down. I start getting excited, man. I can't help it. Let me see. Can you have the stop loss move or follow the strategy that you're playing? Billy, that's a fantastic question. And that is something that you definitely want to do. So that's like some next level Jedi stuff there, man. You're ahead of the game. Here's something else that you can do. And I teach this all the time to students with Replace Your Dollar. If you have a trade that is running in your favor and it's profitable, especially for newer traders, I preach profitable, not perfect. So if you break down this profit range here and say this is 100%, right? And if we just split it in half, anytime that a client has a trade that goes into his or her favor 50%, what I teach them is to move their stop loss into the money so that if it does pull back, they're getting stopped out of the trade. But get this, it's for a win and it's an unlosable trade. So this is active management of trades. As this thing's dropping, it's profitable on the short, you move your stop loss. If it pulls back, boom, you're still making money. Here's the other part. Let's say that there's a ton of momentum on this trade and this thing is just tank city, right? It's just dropping. You're getting big bear candles coming in. Sky's falling. It's going to zero. Netflix is going to zero. You got to switch over to Roku, right? Here's what you could do. Just as you can move your stop loss, you just take your profit target and inch it down. And if there's momentum there and it's really strong, you inch it down. And oh yeah, while you're doing that, you take the stop loss and you move that stop loss down. And you do that until that momentum runs out. And then you're just counting your profit. And it's very simple to do this. I do this all the time because it's protecting your capital. You just go into your broker or you go into your phone, quick adjustment to your trade, boom, 10, 15 seconds, you're done, you go about your day. Game-changing stuff. Game-changing stuff. All right, let's see what else we had here in terms of questions. Man, I can't wait till the market opens tomorrow. How do you know when to pull out to take your profit? So again, that comes from your chart analysis. Stop loss is your friend and probably possibly your saver. Yes. What happens after you buy back at the lower price? So when you buy it back, so when you're shorting and you buy back your shares, the broker completes its transaction. That difference in shares, so let's say it's $1, however many shares you sold and bought back, let's say it was 100, that $100 gets deposited immediately into your cash account and your brokerage. It's immediate. That's the other cool thing about trading. When you have a winning trade, you don't have to wait till payday Friday. Boom, it's right in your cash account and your broker that you can then withdraw and put into your checking. But if you keep it in interactive brokers, it pays 4.89% on all idle cash. Just saying. Just saying. I don't know why more people don't trade. I really don't. I really don't. Going back through here, can you adjust the stop and sell loss? Yes, you can change. So this is active management of the trade. You can change these things all the time. And you want to do that. As the trade is giving you new information, make adjustments. That's smart trading. And that's going to take you time to develop that skill. But if you're willing to put that time in to learn it, again, it's going to reward you. Svetlana says, what can you compare the short to? I have a hard time understanding this. So Svetlana, it was the same for me. The best way, so I'm going to rack my teacher brain here to try to So if you think about it like this, let's just say I don't own any, let's just take Netflix, for example. Let's say Netflix is $5, but I don't own any of it. But I know that Netflix is going to go down to only being worth $1. Okay. Your broker that you trade with has shares that they will loan out for you to sell at whatever price you desire, because the broker makes money on this. Think about it. There are billions of traders in this world. So a few pennies over a billion traders, they're making money off of this. So that's why they loan these out. So Svetlana, they're going to give you these 5 shares, right? So they give it to you and you say, hey, I'm going to sell these at $5. All right. The price drops to $1. So now, Svetlana, what you say is, hey, I'm going to buy these Netflix shares for $1, and now I'm going to sell them back to my broker. So that $4 difference now times however many shares that you sold at that higher price, let's just say it's $100 for an easy example, you just made $400. And here's what I'll tell you, through practice and repetition, the shorting concept becomes something that will stick. And a lot of people have some trouble learning it and getting it to stick. It's okay. It's part of the process. You just have to keep practicing it and doing it to really have it drive home. Okay. And I'll tell you this, at first I was afraid to short. I was like, man, I'm going to lose a ton of money. But it's a cool feeling to short a stock, because as it's going down, you see your profit going up in your broker. It's so cool. It's really cool. So I'm a perma bull though. I like a bullish market. There are people out there who call themselves perma bears. They like the markets going down, but both are highly profitable. All right. And I'll take one more question here and we're going to keep moving forward. So Jason says, when you buy it back when it's low, are you stuck with the shares you buy back? No, because you buy those shares and you're selling them back to the broker. So it's almost 3 transactions. The broker gives you the shares, you sell them, then you're buying shares back, and then you're selling those shares to the broker. So it's like 3 things that are taking place. All right. Billy asked, can you set up the stop loss to automatically adjust, say, to a percentage? You can do that. I always do mine manually. There are ways, though, that you can automate that. There's so much that you could do out there. They even have algorithms that will adjust your stops for you. I haven't got that deep in it. I'm a control freak. I want to be in control of it. So I know they exist, but I can't really speak to it tonight because I don't do it. All right, so that's day trading, in and out within a day, 9:30, 4 p.m. Swing trading, all right? This is any trade that lasts longer than a day, up to a few months and beyond. So you might see, so let me go to Trading View real fast. Let me pull this up. Did I tell you that I love trading and charts? All right. So let me go. So somebody asked you about time intervals for candles up top here, where this says 1 month. You could see all these different types of candle intervals that are available to you. I'm going to go to a daily chart here. Now, my chart has a bunch of stuff on it, or it's probably looks overwhelming. Let me hide a lot of this stuff. Volume. All right. So to where it's just the candles. So this is a daily chart. So for a swing trade, what you would do on a swing trade is this is something that you plan on holding on to for an extended period of time. You're not trying to be in and out, right? So this is, let me go to Apple real fast. You know, I did Apple a lot yesterday. Let's go to Meta. So all the stocks I trade here are free for everybody to see. All right. So Meta, This is Facebook, the artist formerly known as Facebook, right? So one of the things that you're able to do when you're looking at charts is you want to find certain areas where the stock bounces, right? Those are support areas, and we're going to get into support and resistance later on. But let's say that in this range, you see Meta fall. So this is back in 2020, right around here. And let me get a highlighter. So this area here, we see it pull into the support. So knowing that this is an area where Meta typically bounces and goes up after a bearish move, you could set up a swing trade where you get in because you're buying low and you're going to give it some time to run, right? So these are daily candles. Let's say you set a profit target up in this range. You just let this thing go. And so unlike day trading where you're actively managing it during the day, this, you could passively manage the trade to where, you know, once every other day you check in, you have your stop loss entered, your profit taker entered. And just like I talked about moving your stop, you can move your stop into the money. You could adjust your profit target. But your swing trade is anything that lasts over a day. And this could be just as profitable. Here's what I'll tell you right now. And I was talking about this yesterday, because the market has pulled back so much and there's still a chance that it pulls back even more, right? If we look at, let me make this. So this is the, right, I'm too far. So this was where things started to come down. This was when inflation started to rise after the printing of all the money during COVID. This thing dropped, right? Pretty soon, if let's say that we come back down here and retest these lows from the fall, this would be a good buying area for swing trades for this to rise. This is the S&P 500. But again, swing trades are anything that lasts over a day. So let me come back to the presentation. Share. I'm trying to be quicker here with this. So swing trading, anything that lasts longer than a day. I showed you that on a chart. Bullish trade, swing trade, trading as the market goes up. Bearish trade, trading as the market goes down, shorting it. So you can short on swing trades as well. So that's the difference between day trading and swing trading. Even if you're not going to day trade, it's of my belief that all human beings on this earth, if you have a pulse, if you breathe oxygen, if you drink water, you need to swing trade. You need to trade. There is too much money out there for you to take for yourself and your family that there is no good reason for you not to do it. There's not. I'm sorry. You need to be at least swing trading and long-term investing. All right. Sometimes I rant, but I believe in this. Okay. So when we talk about investing, so we have day trading, you're in and out within a day, swing trading, anything over a day, investing. So I have a different definition of investing, but typically as it's presented to us, it's buying and holding stocks long-term, right? Typically over 5 years, right? And there's a strategy right now, and I'm sure a lot of you fall into this category, that if you own 100 shares of a stock, you are right now missing out on passive income every month, using options. All right. This is something that I do with my long-term portfolio because I invest all my money now on my own, but you can sell what are known as covered calls. It's an option for shares that you own. And basically someone will pay you to rent your stocks. They're going to pay you a premium, just like you pay a premium for insurance. And that premium, let's say it's $2 and you have 100 shares, you're going to get $200 for someone to rent out your stocks for that month. So if you have 1,000 shares and you rent that out for $2 premium every month, that's $2,000 times 12 months. You could do the multiplication there. That's $24,000 passive income right away. And it's real. They're called covered calls. Look it up. All right. Now, here's where I take exception when people talk about investing. And I'm going to drop, this is if you walk away with something most valuable here tonight, this is it, because I'm going to show you something that you could do now that blows out of the water how we typically are taught to long-term invest. So let me go back to the chart. All right. And let me bring up TradingView. Close this. Stop share. Share. See, I talk there I am talking to myself again. All right. So let me delete this, and I'm going to come back to Apple. All right. Because Apple's pretty good. Okay. So long-term investing. Here's the typical way we are taught to invest long-term. And this is how I used to do it. So when I worked in education and I had some additional money, they, okay, I'm going to buy some shares, right? So here's the old way of investing. First of all, everybody should have a long-term portfolio where you are investing in stocks that you believe in, good companies, right? Do not trade penny stocks. You will lose your money. Don't waste your time. It's not worth it. Okay. So here's how I used to invest. Hey, I got a little bit of extra money. I'm going to buy some Apple. So I buy right here at $103.69. And then a couple months later, hey, I got a little bit of extra money. I'm going to buy some Apple. It's at 177.13, but I don't care. I mean, I was always told to just buy and hold it. All right. And then a little bit later, I buy some shares here at 154. Right? Oh, it's a lower price. That's good. But my other shares are kind of down. And then here, I buy some more shares. There's not a great return on your investment here, right? Because we bought at a really high price for Apple back here in 2022. Yeah, we bought lower here, but we could see that the market kind of dropped. Now it's coming back up a bit, but you're not guaranteeing yourself great returns on your investment. So this is not the way to invest long-term. Now, you could do it this way if you don't want to actively manage it, but there's a better way. Here's how. And this is where knowing how to trade comes into play. All right, ready for this? So I talked about support and resistance. There are specific areas where stocks stop moving upward and pull back. There are areas where the stock stops moving downwards and bounce. Here's a smarter way to invest if you're going to invest. So when Apple pulls down into a range where it typically bounces, and it's not always exact, but we could see it gets down in this area and bounces up. And if you go back in time, you could see that this area also acted as a resistance for a period of time. Okay. So knowing that, and this is what you learn through trading and reading the charts, you will know that typically when Apple gets down in here, it's going to bounce and it's going to go up to a resistance area like it did here, here, and here before it comes back down. So here's how you invest. This is a free nugget, $100,000 nugget. Anytime Apple drops into this 133.67 range, buy. You're going to have discipline because you're going to have to wait. When it gets back up into this resistance area, sell. Now you have more money than you started with. And what do you do next? You wait for this thing to drop. Boom, you buy it here. And oh, it goes down a little bit more. I'm going to buy some more. And now look on Apple where we're getting close to this range. So what am I going to be doing here pretty soon? I'm going to sell. And now I'm going to have even more money than I had here and way more money than the dude that used to just buy and hold Apple. If you repeat this process and you know these areas on the stocks that you trade, because you should invest in more than just Apple, and you repeat this over and over and over again, your returns on your investment will destroy the traditional buy and hold, because this is intentional. This is planned out. It's based on data and it works. All right. This is real investing here. Right? This is active investing. Okay. So does that make sense? Any questions about swing trading, investing? Go ahead and throw it in the chat. How long does the selling process take? Instantaneous. If it's during the market open, click a button, you're going to get filled on your order. But Billy, here's the cool thing is you could set up in your brokerage. So let's say you buy at that support area. You can put in your brokerage a good till cancel order that once it hits that resistance price, that it automatically cashes you out. So you don't even have to manage it. The names of the highs and lows again, support and resistance. We're going to cover that in a class later this week. Does borrowing someone's stocks make them a broker? No. All right. I don't think we had too many questions there. Let me, come back over to the presentation. Oh man, it's 9:11 already. Geez, we're rolling here. All right. So comparing the three, what are the differences? So day trading in and out during a day can make you a lot of money, bullish or bearish, does require active management. You can capitalize on smaller market movements. Swing trading, again, can make you a lot of money, bullish, bearish over the course of a day, requires less active management. You can capitalize on bigger long-term market movements. And then investing, again, you can see it can make you a lot of money. You typically, if you're investing, you want to go bullish. You don't want to go short on something, although you could. I wouldn't recommend that. Investing typically a longer time frame. And then I have down here support resistance dependent, and that's based on what I was just teaching you. And it does require periodic management. You should be doing all three to build wealth. But like I said, if you're not at least swing trading and long-term investing, you're missing out on so much profit. And again, you don't have to do this full time. You don't have to quit your job. And some people love what they do. That's awesome. But you can be adding value to your family, to your friends, by taking your money and growing it through the markets. It's available to everybody. So we've covered a lot of content. I just want to drop the link back in the chat if you want to set up a discovery call, if you're liking what you're hearing, if you want to learn more. I could talk to you about all these things. We teach all these things. And again, it is life-changing. It can change your life. It has changed my life. Like I said, it's a personal mission of mine now. I want everybody to trade. So if I were to see you out in the real world, trading is going to come up to the point where my wife is like, all right, can you stop? Not everyone's talking about trading. But again, I see the power and what is available, what it can do for your life. And so it's a mission of mine. I want everybody to know about it. I want kids to know about it. We should be teaching this stuff in school. I don't know why we don't. I don't know why we don't teach real estate in school, being in the education system. These are things that are needed. Just think of the independence, financial independence that our kids could have if they start learning this early. Why isn't this taught in a curriculum in schools? I don't get it. Anyway, if you want to learn more about it, schedule a discovery call with me. I'd love to talk to you about trading. Like I said, I could talk about it all day. Let's do a quick review, and then we're going to do a practice quiz before we close out night number 2. So what does it mean when the market is bullish? It means it's going up. What does it mean when the market's bearish? It's going down. What is a stock? Hopefully you know that by now. You become a business owner. What does it mean when you go long on a stock? You're going long. That means you're going up. You're taking it bullish. When you're going short, you're taking the price down. You're profiting off of that. You know the difference between a day trade in and out between 9:30 and 4, swing trading, anything over a day, long-term investing, traditionally 5 years, but I showed you how to do it with support and resistance, candlestick chart versus a line chart, 4 pieces of information versus 1, right? This is just one night, folks. We covered a ton, right? This is a strong foundation for you. We still have 3 more nights to go. You're going to have so much information coming out of this that you will need to capitalize on this and keep learning, because again, what's available to you through the markets is incredible. All right, so here we go. Quiz. Let's get practice. This is practice for Friday. And I'm going to pull up the chat so we can see here. Here we go. What is a stop loss? Protection, safety net, limit of what you can lose. Yes, yes, yes. Most you will lose. Yep. To prevent a loss, where you get out of trade. Boom, you guys nailed it. Awesome. Good. All right, here's the next one. Should you ever enter a trade without a stop loss? Good. If there's one thing that I hope you leave this with and you start trading, please, please, please don't ever trade without a stop loss. You're asking for trouble. If I'm in a trade that lasts 5 days, what type of trade is it? Swing trade. Yep. Perfect. If I am in and out of a trade in 3 minutes, what type of trade is that? Day. Good. The upper wick on a bull and a bear candle is known as the what? It is a shadow. It is upper shadow. It's a wick. It's the highest price of the day, right? The upper wick on both a bull candle and a bear candle, that's the highest price of the day. How about the lower wick on a bull and a bear candle? What does that represent? Lowest price of the day. Yes. Perfect. You guys are awesome. You're going to be ready for this quiz on Friday for sure. Remember, that's a $100,000 funded account and a $50,000 funded account. You'll have an opportunity to win both of those. So that's going to do it for day number 2. We got a lot of good stuff coming up tomorrow. Here's what we're going to get into tomorrow. We're going to go into support and resistance. We talked a little bit about it tonight. I have one of the most important concepts. It may be the most important concept when it comes to trading. We're going to get into that. We're going to talk about identifying the trend of a chart. The trend is your friend. You don't want to trade against a trend. We'll talk about that. We're going to talk about these beautiful types of candlesticks that are known as hammers. They're my favorite. They are particularly bullish. When you see a hammer, get excited because there is buying pressure. I'm going to show you how we can use them for trade entries. And we'll do a practice quiz tomorrow. And that's for Friday's giveaway. So I've got to update this language here. So that's what we're looking to get into tomorrow. So to close this thing out, just go ahead and throw in the chat what's one takeaway or a few questions that you have. I'll take a few minutes here to hit those for you. Takeaways or questions. You mentioned having LLC. If we were in a W-2 job and start trading on the side, should we set up an LLC? You can wait on the LLC. If you're going to go full out on this, then you need to have that, but you don't have to be in a rush to set that up. Was not able to sign on yesterday. Well, there'll be recordings. Yes, the recording from yesterday is already posted. I will try to get this posted as soon as possible. What's my opinion on real estate versus trading? So I love real estate. I have not started investing in real estate yet, but Edmund is my best friend. So that's happening sooner rather than later. I love both. I think everybody should do both. Suggested amount to start trading. So in order to day trade, you have to have at least $25,000 in an account. You can't go below that number or they will flag you as a pattern day trader. So you want to be a little north of 25,000, but they do have funded accounts available where you can trade with other people's money to where they're keeping a chunk of your profits, but you're keeping the bigger part of it so that doesn't have to be an issue of you. What time do you tend to trade? I trade 2 times, 9:30 to 11 a.m. and 1:45 to 2:30. That's it. What are the dangers of shorting a stock without a stop loss? You're losing all your money. Don't do it. Can you trade your self-directed retirement funds? There is a way to do that. should I manage my 401k? You can, but you've got to make sure you put in the work before you do something like that. You would want to make sure you're taking your time to learn it. And when you get to the point where you feel confident, then you could go that route. You should be, yes, you should be trading. IRA, 25K cash value to day trade without, yep. Do we just swing trade if we worked? Yeah. You could technically set up a day trade while you're at work and just check it on your phone. I'm sure you get break time or a lunch period. You could set it up around 9:30. You can see how the market opens, plug it in, and you could check it. I mean, the last time I checked, you're not in prison, you're at work. You could take a few minutes. Do you have to qualify? So for funded accounts, the way they work is you have an evaluation phase where you have to grow it by a certain percentage. Once you hit that percentage, the money becomes live. 75% of the profits are yours. The company keeps 25%. The company that we work with on our funded accounts, you can get funded accounts up to $500,000. $1 million is even on the table for, some qualified traders. So money's not an issue. If we can empower people to be able to trade and overcome that barrier, the company wins with the percentages that they're getting, and we're helping somebody change their lives. So the recordings will be posted. If you miss it, don't worry. We'll be on here at 8:15. So all good, but that's going to do for today. Listen, thank you so much. You guys have been great tonight. I love the questions. I love the engagement. Bring a friend with you tomorrow. If you have children, bring your children. They need to be learning this stuff. Bring your spouses, bring your nieces, your cousins, your friend, bring them. They need to learn this too. This can change your life. You guys have been awesome. I will see you back here at 8:15 again tomorrow. And I'll get this recording published and up for everybody. You guys rock. Tomorrow is Wednesday, WINS Wednesday. Here's the one thing that I will tell you. So tomorrow, the inflation report is coming out. It's going to indicate whether or not inflation is coming down or if it's going up. That's going to drive the market. So you can see if we have a bad inflation report, go check out those candlestick charts, especially the SPY. If it's bad, you're going to see big bear candles. If it's positive and that number is low, you're going to see some big bull candles. We're going to start tomorrow's session by talking about that so you can see this in action. And love you guys. This has been great. I'm jacked up and ready to go, and it's late, so I'm not gonna be able to sleep. Have a great night. I'll see you back here tomorrow, 8:15. You guys are awesome. Take care.